I'm Daryl Rayford, CFO of Bandwidth, and it's really great to be speaking with you today. Turning to our first topic, our 3-year financial targets. We expect to see a revenue CAGR of 15 to 20% over the subsequent 3 years. We expect to see this revenue acceleration from improving macro conditions, faster growing enterprise adoption, and dependably cyclical campaign messaging. We also expect to achieve a greater than 60% non-GAAP gross margin by 2026, as well as more than 20% EBITDA margin and greater than 15% free cash flow margin. These targets imply the generation of approximately $125 million in free cash flow over the next 3 years. We're excited about our business and its projected financial capability. Let me walk you through the drivers that will help us achieve these milestones in each of these measures. We expect to see continued moderate growth within our core foundation of global communications plan customers. Messaging is expected to continue to grow at a faster pace and to make up approximately 30% of revenue, reflected here in the programmable services category. And direct to enterprise is expected to contribute 10% of revenue within 3 years. What's exciting about this growth and diversification of our revenue streams is that the 2 fastest growing categories are also accretive to margins. Our revenue is also becoming more geographically diverse, where markets outside of North America are projected to grow at a faster pace. And we expect greater than 20% of our revenue to come from outside North America within 3 years, representing a CAGR of 15 to 20%. The benefit of this increasing international revenue is the resulting higher margin profile that comes with many of the international locations. We have 4 gross margin expansion drivers. These drivers have contributed to the 7 percentage point increase in non-GAAP gross margin we've achieved from 2019 to 2022. We expect to add about 5 additional percentage points to non-GAAP gross margin over the next 3 years. I've already addressed 2, increasingly diversified customer revenue driving favorable product mix and expanding revenue across international markets. There are additionally 2 further drivers that are equally important contributors. One of these relates to scale, where we benefit from our Bandwidth-operated cloud platform. Favorable owner economics occur as we grow our top line and spread the fixed cost of our communications cloud over a larger revenue base. The final driver comes from operating efficiency. As the organization has scaled and matured, we've developed an aptitude for working smarter and driving operating costs down. Turning to our investment in operating costs, we expect to see improved leverage. Through 2026, we expect both sales and marketing and R&D to settle in a 14 to 15% of revenue range. We also expect our G&A as a percent of revenue to continue to decline over time as we demonstrate operating leverage. Let me drive home the power of growing our gross profit dollars in combination with our increasing cash gross margin, referred to here as EBITDA produced from gross profit. In 2022, Bandwidth produced $260 million non-GAAP gross profit dollars. Through 2026, we expect to grow gross profit dollars, and within our business strategy, we expect to invest 60% of our gross profit dollars for operating expenses, leaving 40% of cash gross profit in adjusted EBITDA. This represents an improvement in profit of 208% and clearly demonstrates the power of our business model to drive profitable growth. I'll turn to our capital structure. We strengthened our balance sheet in the fourth quarter of 2022 with the repurchase of $160 million of our 2026 convertible notes at a nearly 30% discount to par value. Following the repurchase, there remains $240 million of debt maturing in 2026. That cash balance, combined with the approximate $125 million of free cash flow that we expect to generate in the next 3 years, would be more than sufficient to retire the 2026 notes and fully fund our business needs. Also, our targeted 20% adjusted EBITDA margin and 15% free cash flow margins in 2026 position us to fully retire the 2028 convertible note obligations if we choose that option. In summary, I'll leave you with one key message. Our core principles, which we have rigorously adhered to since our inception, will continue to be our North Star, guiding our path forward as we accelerate momentum and achieve our goals through the next 3 years and beyond.